Hello everyone and welcome to the SBI Securities Weekly Wrap podcast. So firstly, let's discuss how the markets have been in the week gone by. The domestic equity benchmark indices Sensex and Nifty touched fresh life highs of 73,425 and 22,124 levels during the week, but erased the gains in the later part to finally close the week with loss of 1.6% and 1.5% respectively. Broader markets outperformed with BSE mid-cap and small-cap rising 1.3% and 0.3% respectively. Strong momentum was witnessed in the PSU and oil and gas stocks, which gained 4.9% and 4.3% respectively during the week. Railway stocks also gained ahead of the budget on 1st Feb on expectations of healthy order inflows to the railway companies. The ongoing earnings season drove stock-specific action in the market. Results from big names such as Ultratech, HUL and HDFC Bank kept the respective sectors in focus. While Ultratech set the tone for healthy results for the entire cement pack, weak results from HUL dimmed expectations of demand recovery in the FMCG space. Overseas, the US bond yields climbed on speculation that the Federal Reserve will be in no rush to cut interest rates as economic data releases during the week showed signs of resilience. However, the major benchmarks of US equity market gave a positive closing for the week. Next week will be a truncated one as the Indian stock market will remain shut on Monday and Friday. Meanwhile, market will continue to track global cues with momentum largely be driven by stock-specific result reaction. In US, flash services and manufacturing PMI for January month and personal consumption expenditure data are scheduled to be released next week, which will also be in focus. No major economic data is lined up for Indian market next week. Talking about the weekly sectoral gainers and losers on BSE, so BSE, PSU and oil and gas indices closed with the highest gains of 4.9% and 4.3% respectively, followed by capital goods, IT and auto sectors. While BSE, BankX and realty sectors lost the most, declining more than 2% each, followed by FMCG, metal, consumer durables and power sector. Talking about the weekly Nifty 50 gainers and losers, so stocks like ONGC, Tech Mahindra, Apollo Hospitals, BPCL and Coal India were the top 5 gainers of Nifty 50, while HDFC Bank, LTI Mindtree, IndusInd Bank, Divi's Lab and Bajaj Finance were the top 5 losers of the Nifty 50 index. Taking a check on some of the key monitorables, the FIS net sold Rs 9,937 crores, while DIS net bought Rs 11,432 crores worth of equities in cash market during the week. The rupee depreciated marginally by 0.1% to Rs 83.16 per US dollar. Brent crude remained stable at $78.6 per barrel. Moving on to some key economic developments during the week, the wholesale price index of India stood at the highest in 8 months, increasing to 0.73% year-on-year in December month of 2023, driven by an unfavorable base effect. But overall, the wholesale inflation stood at the comfortable range. The Chinese GDP expanded 5.2% year-on-year in fourth quarter of CY23 compared to 4.9% year-on-year growth in third quarter of CY23. The growth came amid economic headwinds of delayed COVID-19 recovery, real estate crisis, low corporate and consumer confidence, growing local debt and sluggish global growth. The UK consumer price inflation unexpectedly increased to 4% year-on-year for the December month, led by rise in alcohol and tobacco prices. Core CPI, which excludes volatile food, energy, alcohol and tobacco, grew 5.1% year-on-year, beating consensus of 4.9% year-on-year growth. Talking about some of the key corporate developments during the week, so a lot of companies declared their December quarter results, wherein Reliance Industries reported revenue, EBITDA and PAT growth of 3.2%, 16.7% and 10.9% for the December quarter. So overall, the company reported good set of numbers. HUL reported consolidated sales, EBITDA and PAT decline of 0.4%, 3.5% and 5.6% year-on-year respectively. So overall, the tone from the management was also slightly on the weaker side. The demand challenges, persist for the HUL company, and that has set the tone for a slightly weaker results from the FMCG pack. Ultratech Cement reported a very good set of numbers with its consolidated sales, EBITDA and PAT growing by 7.9%, 39.3% and 67.9% year-on-year respectively. The total sales volume of the company grew 6% year-on-year to 27.3 million tons. So, very good set of numbers from Ultratech Cement. HDFC Bank reported NII of Rs 28,471 crores, which was up 23.9%. The PAT of the bank grew 33.5% on year-on-year basis. The gross advances of the bank grew by 62.4%, while deposits grew by 27.7% for the December quarter. Asian Paints also reported somewhat in line set of numbers with its consolidated revenue growing by 5.4%. The EBITDA and PAT of the company grew by 27.6% and 34.5% year on year respectively. EBITDA margin of the company stood at 22.6%, expanding 393 basis points on a year on year basis. Oracle Financial Services delivered extremely robust set of numbers with its third quarter FY24 revenue, EBITDA and PAT clocking growth of 26.2%, 57.6% and 77.5% on a quarter-on-quarter basis respectively. The EBIT margin of the company expanded 926 basis points quarter-on-quarter to 46.6%. So we also see a very sharp rally in the stock price of Oracle Financial Services during the week. LTIMindtree reported third quarter FY24 revenue and PAT growth of 1.2% and 0.6% on a quarter-on-quarter basis, respectively. The LTM attrition rate of the company stood at 14.2%, while EBIT margin stood at 15.4%, both declining by 100 basis points and 60 basis points quarter-on-quarter, respectively. So the results from LTIMindtree were slightly on the weaker side. IndusInd Bank's net interest income and PAT grew by 18% and 17% year on year respectively. Advances grew 4% quarter on quarter and 20% year on year to rupees 3.2 trillions, and deposits grew by 3% quarter on quarter and 13% year on year to rupees 3.6 trillion. So overall good set of numbers from IndusInd Bank. If we talk about some of the key corporate developments or some of the stocks which were in focus during the week due to the news. So Rail Vikas Nigam Limited emerged as the lowest bidder for supply, installation, testing and commissioning of 11 kV line associated works for a cash consideration of rupees 251 crores. PNC Infratech received a letter of award from Madhya Pradesh Road Development Corporation for construction of road projects worth rupees 1,174 crores. Ashok Leyland bagged an order for supply of 1,225 buses from Karnataka State Transport for consideration of about 552 crores rupees. EMS Limited emerged as the lowest bidder in tender worth rupees 479 crores from Uttarakhand Urban Sector Development Agency. So talking about the calls which we have given in the week. So this week we have given 3 calls in our pick of the day segment. First one is Electra Greentech. The call is given at a price of rupees 1,655 for target of rupees 1,820.5. Electra Greentech is a leading manufacturer of electric buses catering to city and state bus corporations in India. The order book of the company as of September 2023 stands at 8,209 e-buses and 25 e-tippers. This includes the largest order of 5,150 bus orders from MSRTC. The order pipeline also continues to be strong with a prospective order from BEST, where the company has emerged as L1 bidder. The company currently has a capacity of 1,500 buses, which it is expanding to 5,000 buses by the fourth quarter of FY24. This capacity can further be doubled to 10,000 buses. The company has also guided for higher execution in the second half of FY24 on the back of enhanced capacity and improved pace of execution. Second call which we have given in our pick of the day segment is on Coal India. The call is given at a price of rupees 376 for target of rupees 414. It is a Maharatna company operating under the aegis of the Ministry of Coal and is a prominent player in the global energy landscape. The Coal India has set target to achieve a production volume of 780 million tons for FY24, 850 million tons for FY25 and 1000 million tons for FY26. So Coal India is the second stock on which we have given call this week. Third one is Mishra Dhatu Nigam Limited, that is Medhani. The call was given at a price of rupees 440.5 for target of rupees 484.6. Medhani is a leading Indian manufacturer of superalloys, titanium, special purpose steel and other special metals used in critical applications such as defense, aerospace and nuclear energy. Around 70% of the company's products are supplied to these critical sectors. The current open order book of the company stands at rupees 1,750 crores versus 900 crores at the end of FY23. The company has also won orders worth rupees 1,100 crores in year to date of FY24. In our pick of the week call segment, we have given a call on Usha Martin at CMP of rupees 313 for target of rupees 360. Usha Martin Limited is a leading global and India's number one specialty steel wire rope solutions provider. The management has guided revenue to grow at a CAGR of 15 to 18% over the next 2 to 3 years. It highlighted its EBITDA per ton to range between rupees 30,000 per ton to rupees 40,000 per ton, with margins to clock around 18% on the back of new capacity coming online. The company is undertaking capex in two phases to modernize its existing production facilities to improve infrastructure, productivity, and minimize the cost. The total capex outlay is rupees 542 crores. Around 75 to 80% of the overall capex will be funded through internal accruals, and the rest would be through debt. So, these were some of the calls which we gave during the week. For key corporate actions in next week, kindly refer to our weekly wrap report. The link to view the report is shared in the description box below. So, this was all about the weekly market podcast. Thank you for listening.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.